Now it's time to talk about scaling in, trailing stops, all of the management of low time frame trades. Now we've already spoken about management on high time frame trades and it's very similar to that, but we are much more active on the low time frames with scaling positions and also trailing stops, because this is generally how we build our positions on every single position and how we close out our positions on around 50% of the positions when they don't reach the full target. Whereas the high time frames, the scaling and trailing is kind of a bonus. Well, stop trailing isn't, but the scaling in is a bonus. It's pretty much a given on the low time frame work, and wherever we can get a good scaled opportunity, we will actually look to add a new position. So for this video, I'm going to show you a New York session opportunity because I've shown a lot of London so far, which is going to be a short position down targeting this area. So just for this example's sake, this is the basis of the trade where we have this uptrend with a large impulse, but we now have these two equal lows open and balance into this demand zone, and we can see here from this high that the market is starting to shift to lower lows and lower highs. So all we're looking for on this position is either a pull up to this zone and a sell off, or a pull down to break this structure, then a pull back, and we can look to ride the trend down. So let's drop to the low time frames. We'll start here on the 3-minute time frame, and what we're looking for is either a push up towards this supply area, so where we could look for a reversal, or a push down to break this structure low, which would then indicate the market is ready to move to the downside. So leaving the market to play out, we do see a sell-off and we then see a break of structure. Now, if we go to the 1 minute, this is where we would start executing positions. As we can see so far, no positions have been given to us. We did have the rollover, but the initial break of structure actually was this push here. So what we can do now is look towards the zone that broke structure. This is the area where all of the final selling pressure entered the market, and that is this area here. And we could actually look at this and drop a sell limit order on this level. So we drop our sell limit on, and that is going to be the first push to the downside. Now for this, remembering what we said before, we do have some tricky wicks to work with here. So our stop loss management, we could go with a 5 pip stop to clear these highs as well. Now it would be valid to put it here, 3 pips, 3.5 pips. But for the example's sake, we'll go with the safe stop and pull it into there. Now let's have a look what the risk reward is. We have a potential 6.6 R move, which is going to be 0.5% risk at 3.3 or 1% risk at 6.6 potential. So leaving the market to play out, we'd see we get a retest into the zone. Remember, we used the low of the zone because we are on the 1 minute time frame. This is one of the examples where the midpoint would have worked, but we don't need to worry about that too much. We can just run with the system. And then what we're now looking for is, first of all, a break of this low. We would then go break even on this position, and we could also look for a scaling opportunity. Until we get a break of that low, we are not too worried about moving the stops, but here we see we do indeed get a break of the low. So what we could do here is look towards the zone that broke structure, which is this one here, and simply mark this zone on and then plot a trailing order. So our order will go on there. Our stop, let's say 4.7 pips, we can keep it over this high, and now we can pull the trade down into this point. Now at this point, what we do is go break even on position number 1, because we have indeed broken the low. So that means we have no risk sitting on this position. We could actually put the stops to this point. So we have no risk on this position, and we have 1% or 0.5% back on this position. So if we then leave the market and see if we're going to get tagged into this position, we've now made a new lower low and we did indeed fail to reach that high. But we do have an imbalance here, so I'd be cautious and I'd actually consider leaving the order as it is for the meantime. If we do then come back in, reject this supply point and then sell off, I would consider looking for another area. But as we know, if we have an imbalance like this, it's very likely that we're going to come and test it just because it was left open here. So in an instance like this, we could just consider waiting for what we get. But if we do get a push like this and then a sell-off, then we can start looking towards this point and anticipate, okay, we've had 2 significant structural breaks down from that level. It's likely not going to get tested. So as we can see here, we have had a retest. Now what we would do is nothing yet. We want to wait for a push below the next low, and that is when we can then start managing the position effectively. And as we see here, we get a break under the low. So this position, second position, we can now move the stops to this point. And what we can also do is move the stops on position 1 to that same level. What this does is ensure to us that we get a profit, because we're going to get topped out break even here, and we'll get taken out at around 1R or 1.25, 1.5R on this move. So even though it's nothing on what we currently have running, doing this allows us to go for large profits in the long term. So we've seen a breakdown. We've now seen a secondary breakdown, potential to look for an order from this point. We do have a big imbalance above, but it could be worth doing. So let's have a go at this. Now, obviously, we're just following the system, following the order flow. Just roll with it, and eventually, you'll either get stopped out or the trade will fulfill the final target. So we can add this final position on. Now, this is a 2.52R position. It's not the greatest risk reward. We could be a little bit picky with this one. In an instance where the risk reward is really bad, I would go picky and put the entry to the midpoint of the zone. If it doesn't get tested, no worries. We're still running some profitable positions. But if it does get tested, it would be very nice to actually lock that in. Now that we've made this new lower low, we could shift our stops to this point, all of the stops on the prior two movements. And that way, if we do fail on this move and we get stopped out for the 1R loss, we will be making a considerable amount on these two positions, and it's going to cover that many times over. So as we can see here, we have now been stopped out of the full move, and what that does is lock us in with a 2.3R position there, a 3.3R position there, and a minus 1R loss. We have a total of 5.6R gain minus 1R gain. So there we have a 4.6R gain move within one New York session. Now this doesn't put an end to the trade. What we could actually do here is look to scale back in when we approach this supply point. Now this is an area I would potentially begin considering shifting over to the 30-second and seeing what that is telling us. 30-second here shows me a zone like this. This is something you don't have to do, but if you can do it, it can be beneficial. And the 30-second would give us an area like that. So we have 4.6R gain on these three positions, which is essentially one position bundled in. Now what we could do is potentially look at placing a second short order on the 30-second zone or at the top of the 1 minute zone. Stops over this previous high here. If we remain efficient, we should be all good. And then we can look to target the low. Now we may not get triggered on this one, but if we do, we might have a nice position here to continue riding the trend down. So here we've seen a push up, we've rolled over. We are looking now like we're going to continue shifting to the downside. We could look at this for a selling position because we see here higher high, higher low, higher high, shift down, broken the low. This would be a nice little selling point for us to actually execute on a position. So if we looked at something like this, we are a little bit late to the party on that, but we can put our stops here because if we remember, this is a 30-second zone. The 1 minute has actually been fulfilled. So this is not a bad position to take. And then we can see if this trade is going to have a profitable outcome. And as we see, we do begin moving down. And as you can see, we have lower low, lower high, lower low. We could actually look to scale this if we wanted to. So let's remove that one because it failed. Look at this zone that broke structure. We could potentially look at adding a short on here. Stopped over the high. Now we do have this imbalanced area to be cautious of, but we just roll with the system. We are going to come out on top. And then if we allow the market to come in, we do get a tap into that. And then we do see a sell-off once again. So let's see if we break the structure low this time. That is where we would go break even. So we've now seen a structure low break. We would go break even on position 2, shift the stops on position 1 to this level here. So now we've locked in a definite profit regardless of what happens on the outcome of this trade. And if we just continue letting this trade run, get a pullback here. Did we tap break even on this position? Let's have a look. So we didn't tap the stop there. We are still running in this position. I'm going to grab my price range tool, see how many pips this was. So this is 0.4 pips, obviously a very small movement there. But this is a major pair, so I don't believe we would have been stopped out on that trading GBP USD. We did come back and actually trade to this supply area, but we are still in the position. Now we may get tagged out, it may move back up, but if it sells off, we should be staying in this position happily. The reason being, in general positions, if you were trading GBP AUD, GBP JPY, for example, no doubt you would have been tagged out there based on spread. But that is why I like Euro USD and GBP USD so much, because the spread is small. So that means we are generally not going to get stopped out even if we get a deep pullback like this. So now that we've broken this final structure point, we could look towards some meaningful supply areas. Now, for me, this one's a little bit tricky because obviously this is the zone that broke structure, but the imbalance here and the imbalance here kind of puts me off taking a position at that level. I would look towards potentially adding a position here because this is the high of the most recent structure move. We could attempt to move here to continue with the trend and just see if that's going to finalize the trade for us. But if we do continue running to target, I have no complaints whatsoever. So there we go, the target has been fulfilled. This was a no tag position. This was a 4.31R winner, and this was a 4.67R winner. So we have an 8.9R total gain on this, which is either 8.9% or 4.45% based on whether you're using 0.5% risk or 1% risk. And as you can see, the scaling system once again helped us out. So you saw two examples there. We locked in around 4.6R gain, I believe it was, on the first movement, and then we managed to get into a second positions and made another 8.9R on the run down. So collectively, that's around a 15R or 14R day on GBP USD just through a New York session by following the flow of the orders. So you can see how important it is to trail and scale into positions when you're trading the low time frames. In that right, it's nothing like the high time frames because we just want to get into a major position and then scale-ins can be seen as a bonus. But here on the low time frames, trailing and scaling is part of the system. When we get valid areas to scale into the market, we can do that. If we get stopped out, as we saw here, we can look for secondary entries like this, using this substructure where we had higher highs and higher lows, shifting into a bearish impulse and a lower low. Then we sell into the market and we continue downwards again, trailing the stops all the while until we get tagged out. So like I say, on around half of the positions we take, you are likely to get taken out earlier than the take profit level. And that is no big deal because as you see with scaled positions, we end up making quite a lot anyway. By also scaling in with the system we use, which is to wait for a lower low to then enter a position, we do so without adding any risk, right? So when we enter another position at 1R risk, the other one is always break even or in profit, which means we are never holding more than 1R risk on a position, but we do have the potential for, 3, 4, or 5x gains on what we would get on a standard 1R position. So we cap the risk at 1R, but we extend the profits and open them up to multiple profit targets. For example, if we had just held this trade to the finish line, it would have been 4.67R, but because we added this one, we managed to get 8.9R without ever exceeding 1R risk on the position. And that is the standard scaling and trailing system for the low time frame trade. So let me mark it up for you so we can run through it, and then that's going to finalize this video, and we'll move on to more examples of this in the study section at the end of the technicals. In this example, we're going to look at a reversal opportunity, which is going to look something like this. And when we get this reversal, we're going to have a supply zone. We can get position 1 on here. Okay. Then we sell off, we come down, and then when we pull back in, we could potentially look at whatever supply zone is up here for position 2. Now, position 1 by this point would have been break even because we've gone and broken a structure low. So we enter here, then when we get a break and a new lower low, we go break even on position 1. When we pull back in, we can enter trade 2. And when we break the next lower low, we go break even on position 2 and we shift position 1 stops down to the same break even level as position 2. That means we lock in a guaranteed profit on trade 1 and a break even, no loss on trade 2. So then let's say we come back in, we form a supply zone that breaks structure, then we get the break, then we pull back in, we hit that level. This is where we can then add position 3. And then when we come down like this and break this structure point, what we can do is get the stops from this movement and the stops from this movement and put them here on position 3's break-even point. We can also then go break-even on point 3. And if we continue down, we can either hit the target, or alternatively, what we'll end up doing is pulling back up, hitting that stop at the break-even point of trade 3, and then also lock in potentially 5R plus 3R or 4R plus 4R, whatever, on the first and original two positions at that break-even point, and that is going to be our trade finalized. Now, the alternative example is rather than coming back up and hitting the stops, we are going to just fulfill the profit target, and we'll have 3 full-scale positions bringing in a potential 9, 15, or even 20R gain on that trade. So that is the beauty of the intraday system, the scaling and trailing, and that is how it can be turned into a very profitable and powerful system without increasing risk.